Welcome to The Explainer. If you're a Tesla investor, you probably had a pretty rough Friday. Watching your portfolio take a hit like that is never fun. It left a lot of us wondering, what on earth just happened? It wasn't about the company, but about a trade war brewing halfway around the globe. We're here to break it down and figure out how to think about our next move.
Absolutely. What we saw was a classic clash between short-term fear and long-term vision.
Okay, so here's how we're going to tackle this. First, we'll unpack that Friday shock. Then, we'll look at all the good news, the bull case for why you might be optimistic. After that, we'll dive into the bear case and those geopolitical headwinds. And finally, we'll give you a framework to help you decide what to do next.
So, let's start with Friday. It really felt like it came out of nowhere, didn't it? One minute things are fine, the next, not so much.
It certainly did. And this number right here is what caused all the anxiety. Tesla stock dropped over 5% in a single day, closing at $413.49. That's a big move. That is the big question. Because, I went looking for bad news from Tesla itself, and I couldn't find anything. No bad earnings report, no major recalls, nothing. So what gives? You're right, this wasn't about the company at all. This was pure geopolitics, and it all escalated incredibly fast. It started on October 9th when China announced new export controls. By the next morning, the U.S. was threatening 100% retaliatory tariffs. And by that afternoon, the whole market was spooked. The Nasdaq dropped 3.6%, but Tesla, being so tied to China, got hit even harder.
Okay, so a big political storm hit the market. But, before all that drama, the news around Tesla was actually really positive. So I guess my question is, what are the key reasons people are still optimistic? What's the bull case here?
Well, the fundamental business is just really strong. Just before this trade news hit, Tesla announced they had delivered a record number of vehicles in the third quarter, almost 500,000 cars. That's a huge jump, not just from last year, but also from the previous quarter. The business itself is growing, and that's what long-term investors focus on. And it's not just the delivery numbers. They're also launching more affordable versions of the Model Y and 3, which opens up the market. We saw EV sales in China bounce back in September. Plus, you have potential catalysts on the horizon, like a big software update for full self-driving and a lot of buzz around the robotaxi project. And of course, the big one, the Q3 earnings call on October 22nd, which everyone will be watching.
Right.
This is exactly why some analysts are so bullish. They're looking right past this short-term political noise. And when they do that, they see some serious potential upside, anywhere from about 40% to nearly double the current price. They believe the company's strong fundamentals will win out in the long run. Okay, those numbers look fantastic, but they don't just erase that 5% drop on Friday. So we have to talk about the bear case. What exactly are these rare earth elements I keep hearing about, and why are they suddenly so critical for a car company? That is a great question. The easiest way to think about them is like a secret spice. You only need a little bit, but without it, the recipe for an electric motor just doesn't work. These metals are absolutely critical for making the powerful, lightweight magnets that make modern EVs so efficient. And this is where the problem lies. Who controls the spice rack? Well, for the most part, China does. They control the processing of about 70% of the global supply. This gives them immense leverage. In a trade war, they can threaten to cut off the supply of this critical ingredient. So the risk for Tesla is suddenly very clear. You could have supply chain disruptions or rising costs that squeeze profits. Now, to be fair, Tesla has been working on this. They're developing new motors that don't need rare earths at all and trying to find other suppliers. But that kind of major change, well, it takes time.
And this risk is why the broader consensus among analysts is much more cautious. If you average out the forecasts from dozens of them, their 12-month price target is actually below the current stock price. They see a potential downside of 12 to 14%. The general feeling is hold. Basically, they're saying, be careful, there could be more turbulence ahead.
Okay, so this is where it gets really confusing for a beginner like me. On one hand, the company is breaking records. But on the other hand, it's stuck in this huge political mess that it has no control over. As an investor who's trying to decide whether to sell, hold, or maybe even buy more, how do you even begin to think about this? It's really helpful to just take a step back and think about this classic quote from Warren Buffett. What he means is that in moments just like this one, fear and impatience take over. Money tends to flow away from people who panic over scary headlines and towards people who can patiently focus on the long-term story of the business.
So instead of telling you what to do, here's a simple framework to help you think it through. First, acknowledge the noise. Separate the political drama from the company's actual performance. Second, know your timeline. Are you investing for the next year or the next 10 years? Your answer changes everything. Third, consider the consensus. The pros are cautious for a reason. And finally, watch that key event. That October 22nd earnings call is when we'll get our next big piece of real information directly from Tesla.
So what you're saying is, it really all boils down to your personal time horizon. The decision isn't just about Tesla, it's about whether you're focused on the day-to-day bumps or you're invested in a much longer-term vision. And there's no single right answer for everyone.
Exactly. This kind of external shock, a trade war, a pandemic, whatever it is, it's just a part of investing. It's going to happen. So the real question this whole situation forces you to ask isn't just about Tesla, it's about your own plan. Is your investment strategy built to handle a storm like this without you panicking?
That is such a powerful way to look at it. Thank you so much for breaking down this really complex situation. And that's all for this explainer.